Forward with Dinesh Malpani, COO of V2 Retail, who is joining us now. Uh, Mr. Malpani, thank you very much for your time. We are gathering from the strategists that the focus of the government towards tier 2, tier 3 is only going to increase from here on. The demand trends generally without this focus 2 also much better than pure urban side. You are operating in that side for some time now. Tell us, what are your observations on the demand side? Which categories are doing well across smaller towns?
Good afternoon, Ajay. Nice to get on a call with all of you. Uh, Bharat has always been tier 2 and tier 3. And for us, for the last 12 months and even currently, demand has been pretty strong for the categories of business where we are, especially in value fashion. Uh, so there has been consistent growth. Same-store sales growth have been pretty promising and very good. So that's how we look at tier 2 and tier 3 at this point in time.
Put some numbers for us. How have been the same-store sales growth for you? How do you see more than that FY25 closing? Because is it the momentum likely to continue? Can you give us some concrete numbers?
So last year we closed at same-store sales growth at close to 40%, slightly above 40%. And the current trends and trajectory looks even better and promising for us, in spite the base has gone up for us. The new stores which are opening are also opening at par with our old settled stores. So we expect the trajectory to continue, and that's the reason why we are having a pretty promising and aggressive growth plan for the current year.
Right. Mr. Malpani, good afternoon. Vinny joining in the conversation. So you have a very strong trajectory in terms of the growth for same-store sales, or 40% is what, and plus now you're expecting to see 40+% growth in SSSG. What is the growth that one could expect now in terms of revenue if the demand trends are also clearly improving? You've already seen a 40% growth in FY24 for your revenues, around that level. So what is it that one should be expecting for revenue front?
So very good afternoon. Our optimism is still continuing because we are seeing the same consumer is buying more. We're getting new consumers added to the portfolio. Our customer retention rates are going up. The average buying per family of the number of garments is going with us, and it's still the organized value fashion retail from the overall consumption pie. If you look at tier 2 and tier 3 cities, all players put together still do not serve more than about 7-8%. So the upside for us in terms of growth is very, very large. And I don't see any reasons for the demand slowing down if the organizations do the fundamentals correct. So we are pretty hopeful and positive about the growth trajectory continuing in the current year also.
Right. Okay, so let's come back and look at your revenue for FY24 closing was a shade below the 1200 mark, 1165. And the EBIT for FY24 came in a shade below 150 crores, around 142. Are you saying that for 25 you are expecting 30-40% growth in these two metrics?
Yeah, that's how we are seeing the outlook for us for the year, and we see things panning out as per our plan as of now. So things are looking towards the same direction.
So what exactly is working for you? I'm sure more than demand must be, the product selection. How swiftly do you really, the factor that you're contributing to the growth? How swiftly do you change your, products, or is it deeper penetration, better price points? Tell us what's working for you, in, for clocking such a high growth. What's the strategy?
So, Ajay, there are 3-4 parts to this. I would give say a brief overview on each of this. First of all, disproportionate focus on the product side, where we try to control the entire value chain, starting from the design to the delivery of the product. Thereby, we are able to design great products. We are able to control the entire value chain in terms of fabric sourcing, manufacturing, and from there we are able to deliver real good high fashion at prices which people are really stunned. So if you look at our average selling price per garment has actually come down last year versus the year before. That means we're trying to give great value and great fashion. So that's one part where there's a disproportionate focus on value of the product and the design of the product. Second, we run a very lean, mean machine from an operation standpoint. Our retail operations run very, very sharply focused. Our old inventories or obsolescence in inventory is almost next to nil. So there's a focus on keeping freshness into the store. And inside the stores, we have very functional and very clean displays. It's not very fancy, but it's very, very easy for a customer to browse in and be able to select the product and be able to convert. So the average browse time and conversion in our stores is probably 30-40% much faster than compared to others. And there is a lot of new talent which has been added in the last 6-8 months. There's a disproportionate focus in terms of strengthening our competencies across functions, especially in the buying function, in the design function, in the HR function, in the brand and marketing function, and also in the store growth and development function. So probably I would say it's people, product, and the stores.
Right. Mr. Malpani, I just have one question in terms of you've spoken about 50-60 store additions in this next year, FY25, I believe. When I'm looking at the net cash flow also right now, is it at around, last year was it around 4 crores? So, for this increasing of your stores, how are you going to be factoring that, and what is the strategy?
So fundamentally, Vinny, the growth is being funded through internal resources at this point in time. And we are in discussions to raise a bit of debt, and there is enough interest for people and for bankers to come in. So we don't see cash flow as an issue for our business.
Okay, Mr. Malpani, thank you so much for joining in with us this afternoon and talking about your numbers for FY25. 12% growth in terms of EBITDA is where we could see EBITDA at, as well as in terms of revenue growth of 30-40%.
What is interesting is that we thought of getting V2 retail on the pretext that things are recovering out there. He said, but when were they bad? We are already doing 30-40%. When were they bad for us?
Absolutely, and 50% approximately SSSG growth expecting outlook right now is something.
That is something to watch out for. That is why no wonder the stock is gaining 4.5%.
Absolutely, but
if you like this video, then like, share and subscribe to ET Now.